G'day guys, welcome back. Money in the Tank, episode 57. It's been a little bit of a hiatus since we've last been with you. I can't remember when the last time was. I'm pretty sure it was early Jan, maybe. We got the year running and we committed to hitting the 100 mark this year. So we might be a touch off that. We're sorry we've let the tankers down. So episode 57. So we're on our way. We're not out of the 50s just yet, but I tell you what, we've built up some great content today, and we've really savoured the last few weeks off that we've had. We've had a few different excuses, but there's no excuse now. We're back and we're into it. And we're looking forward to imparting some general in nature, educational, financial, fun topics for you guys today, the listeners out there. So thanks for being with us. My name is Joel Seach, Principal Advisor, Harpel FG. And to my left, we have...
If that's me, I'm Arnie, finance professional.
We can tell who's on your left, mate. And Brad Tabone, startup investor.
My left, and it was a guess, and it was a good guess, Arnie. You did well.
Thanks,
so thanks for being with us today, Tankers. We've got a range of different topics we're going to cover off with you today. So the latest on the inflation market and what that means from a CPI standpoint. Brad's going to take us through a little bit about the latest with fixed loans and what's coming off in terms of this year and what to look for and how that'll impact the economy. Arnie has saved up some great. What's your bit called again, Arnie? I've gone blank.
Rapid fire news items.
Rapid fire news items. So he's got plenty of rapid fire news items, and I'm sure there'll be some Elon Musk in there for the listeners. It's blasphemy to do it without it. So we've got a great episode lined up for you guys today. We've got a Rivkin's Rules, and we've got a terrific 50-50. What's your choice? Arnie, where can the listeners get us at?
Get us at Money in the Tank, YouTube, Instagram, Twitter, and Facebook. And leave a like, comment, subscribe, click the bell notification. And we appreciate your support. Thanks, everyone.
Absolutely. So let's get stuck into Rivkin's Rules today. I've got the Bible with me at the office. Excuse the camera and the voice a little bit today. I'm coming off the back of pneumonia, which is one of the excuses, but we're pushing through. We're fighting on.
Not sure how that affects your camera, but anyway.
The camera's a different story. We won't go into that today. Rivkin's Rule, page 80, under Rivkin's Renee on Success. If you want to make a lot of money in business, expect headaches.
Expect headaches, yeah.
If you want to make a lot of money in business, expect headaches.
Can confirm. And lose hair.
Lose hair? Were you losing hair before you started a business, Brad?
Yeah, no, I started losing hair at about 21, mate. 21 in Thailand, I think I shaved it off. I was actually having this discussion at Andy's place last night because Kaz was saying how, we'll just talk about some business stuff. And she's like, I don't know how you guys do it. They'll just make me have a heart attack. And I was like, yeah, but if you're going to risk it for the biscuit and you want to go all in, you've got to gamble, Kaz. You're going to live a much more stable life and live a much longer life, though, because it does give some headaches.
Yes. I don't know if Arnie, you wanted to touch on this one and give us your 2 cents.
Yeah, I've never really run a business the same way that you boys have, but I could imagine that getting involved in it would be just an extra stressor on top of it, I was just going to make a joke about maybe that was the first time you bought equities, Brad. Being an owner in a business might be a correlation, because I feel like when you first start, you're all excited. You don't sleep very well especially if you're invested in the US market, because you're like, what's happening with my money, sort of thing. So
I'm pretty sure I was, mate. I think that was around it would have been around GFC at 2021, and I would have been invested in a whole bunch of stocks. Would have been resource stocks that got smashed by the GFC. So yeah, probably.
Yeah, that's stressful.
And Jolie, business roller coaster of love, or what?
Yeah, absolutely. Yeah, I've been up and running for almost 4 years now, and previously was part of Big Insto World as a senior advisor. So yeah, starting a business up or running a business, you are a master of your own domain, but you're the what do they call it? The chef, cook, and bottle washer. You sort of doing everything in terms of the early days, especially as you start building your business out. It becomes you've got people coming in to help in different aspects, which we've spoken about on the podcast before with Startup Podcast. If you want to go back and listen to that one, but yes, running a business, I think you sink or swim. You sort of expect, I guess, you go into it knowing that it falls on you, and you're going to expect headaches, and that's part of running a business. But that's part of the journey of life, I think, in terms of understanding that it's okay to be uncomfortable when you're pushing yourself. And we did a course last week about it. It's normal and it's good for you to go into levels of uncomfortability and go into that headache type environment where you're busy and successful, but things are happening and you're feeling like it's getting a lot. And that's sort of talking about pushing outside your comfort zones and being uncomfortable. And I think that stimulates growth. So you don't want to be operating in that level the whole time, because that's when you lose hair and you go grey. But I think at moments in time, and for a percentage, it's okay to be uncomfortable and have that headache type feeling. So agree with that.
I reckon it's also dependent upon what else you got going on in your life. Like if you're running a business, but you've got outside stresses as well. Like the first one that springs to mind is children, which are lovely, but it can be stressful at times depending on what's occurring.
I can confirm that Ben left his job when we started Hammertech.
Yeah.
Left his job after trying for kids for I don't know how many years, and he left his job as a project portfolio manager, and joined. And we didn't earn a sum for 18 months, and in that time he had 2 kids, and so the stresses.
Ben's the CEO of Hammertech.
Yeah, Ben's the CEO now of Hammertech. Yeah, and
if you guys haven't listened to that podcast, go back and listen to that one. I think that was around episode late 40s, early 50s.
Have a look at Ben, and he's half Malaysian, and he was a young man when he joined Hammertech, and now he didn't lose hair; he just went grey.
So good one from Renee today. I didn't mind that quote. I think that's valid. So kicking on to the topics of the day today, do we want to start with Brad talking around the current environment with the home loan information and snapshots that you were talking to us earlier about?
Yeah, sure. So I mean, it's all encompassing, really. So obviously, home loans linked to interest rates. Obviously, Jolly have gone up recently, with indication that rates are going to continue, probably going up for at least another 2-3 rate rises, I believe. We've just had inflation figures come out today as well. Correct me if I'm wrong, Jolie, because I don't have it right in front of me, but
so
it was 7.6.
I can touch on inflation while you get the loan stuff ready to go. So the ABS, which is the Australian Bureau of Statistics, has issued their monthly inflation indicator, and this is the one that they got laughed at the World Summit because we only had quarterly inflation, and the current environment causes as a requirement for the need of monthly consumer price index in the environment that we're in. So they've got monthly now. So the monthly CPI indicator by the ABS rose by 7.4%. In the year to January, but it was below the market expectations, which was forecasting an 8.1% rise. So this month's annual increase of 7.4 is lower than the 8.4 rise to December of 22. And however, it's the second highest annual increase, so it is still high. And according to the ABS, the most significant contributors to that was the annual increase were housing, food and non-alcoholic beverages, recreation, and culture. So the annual increase for the housing group in Jan was 10%, or just under 10, 9.8. It was lower than December at 10.1, and the key contributors to the change were new dwellings and rents. Monthly terms, so new dwellings were up slightly, but however, trending down, and rents were up 0.7. So the rents are still growing stronger than they were 12 months ago, and that's a different story. That's more to do with lack of supply of housing accommodation for rent and shelter. But the new dwelling prices are moderating, which is what I guess we've been wanting to see, is the housing and the dwelling and the trades and everything that goes into that have been rising so strong in the last few years. They're now starting to moderate back to hopefully a more sustainable and normal level. We were joking with some friends the other day to say, bugger all the economic forecasting and the ABS CPI checks. All you need to do is, as an economist, just go out and put a request out to get 3 trade quotes back for, say, landscaping, and see how many get back to you and how quickly, and that'll tell you a good idea of supply demand as to what's going on in the labour market. Joke, of course. So
it's not that much. There's an economist that I actually follow on YouTube, and all he does is talk about lumber prices.
There you go.
That's his indicator. That's
a good one. That's a good one. But he did say that, he got 3 quotes back for landscaping, and one could start next week. So that's a really good telltale sign in terms of how the trades are seeking work now rather than probably a year ago. They didn't really want to seek the work, and if they did, it was, you know, they ramped the cost up because they could. They didn't have the need for it, and now they're, you know, so it's showing like it's starting to moderate back, which is good for just the economy broadly. You don't want to have too much heavy demand. You don't want to have too heavy supply. You want to have that kind of equilibrium, and the rents, as I said before. So that's probably the overall I guess, update from an inflation side of things. So moderating, less than expected, but still high. Hopefully these figures, as we go through the year, let's say we do one in April and we do one in May, we start to see those signs come down overall, and we're starting to see the inflation tick back in line with where they want it to be. It's not going to get to where they want it to be by the end of the year, I don't believe, but they want it, generally speaking, for the regular listeners out there, or just the listeners in general, is they want it to be around the 2 to 3% band, which is where they feel like a comfort level for inflation.
And so I guess another one of those factors that's showing things are, I guess, slowing is GDP. So GDP figures came out as well. So they've come out at, I think, 0.5% for the final 3 months, the final quarter of 2022. Well below kind of most kind of forecasts, where they were forecasting an annual growth of about 2.7. So 0.5 obviously annualized is 2. I don't know what it was the previous quarters, but they're saying it's kind of well below the 2.7 annualized rate that they were expecting. So it does look like, I guess, that lagging data or data is starting to show, I guess, the bite. We obviously, I think, in the first podcast in January, it was the first time we'd seen kind of retail sales go down as well, and so that was down again in Feb as well. And then housing prices have obviously cooled. Obviously, some areas that are growing, some areas that aren't. But I think overall, change of dwellings as of the 28th of February, Sydney down 13.4 with the last quarter at 2.4%. Melbourne down 9.6 on average. Last quarter 2.7. Brisbane down 6.8, but then you got Adelaide up 5.1, right? So there are obviously some areas of the country that are still growing. But talking about loans, which I think is something really, really important to at least be across from a data point perspective for all things. I think loans and this bit of information that I was discussing a few weeks back offline with you guys, I think is a really important one just to watch, and we'll talk about it. But I think the media's grabbed hold of it and called it the mortgage cliff or something like that. Of course, they need to put some sort of thing around it. But basically, Westpac provide some pretty good data of their loan book, and it's broadly representative of kind of the rest of the nation's mortgages. Obviously, some banks that target different parts of the population, but Westpac being one of the big four, at least give a pretty good broad representation of the mortgages. And they've come out saying that 18% of all mortgages overall face off coming off low fixed rates onto higher variable rates over the next 6 months. So that's 18% of all mortgages in Australia. 13% of mortgage holders in Australia have missed a payment in the last 6 months. 6.5% have missed more than one. And so I think they're really, because Australia's got a pretty interesting, I think, disparity between, because there is also kind of, I think leading into the last 6 months, it was record offsets, money sitting in offsets as well. But basically, if you think about kind of your loan book, it's the problem isn't with the top 30% or even the top 70%. It's with the kind of the bottom 30% of the loan books around where income to loan ratios obviously are starting to get tested, because they obviously add when they're taking on loans jolly. I think it's 300 basis points or 3%. I think they did, and now we're seeing obviously interest rates kind of nearly match that. We're starting to kind of hit that that kind of pricing tool that gets put in around to increased confidence around them being able to pay back.
Yeah.
And so with further rate rises and 17 or 18%, of all mortgages coming off low fixed rates onto high variable rates, I think it's going to be very interesting to kind of watch what that does to the economy as a whole. So I think it has direct correlation into housing. I think it has direct correlation into spending and the economy as a whole. And just some figures over the last weekend. So not only are there's a record number. I'll actually bring up the figures while you guys give a response. But supposedly there's like a record drop in listings of properties and also sales. So
I got some special comments to add while you look for that.
Please, go for it,
about both the topics that you've been saying. So I don't know if you mentioned this, but I recall you saying offline that actual number approximately of homes coming off this fixed rate mortgage cliff is around 800,000 homes in Australia.
Correct.
Which is an interesting data point, I thought. At the same time, I remember having a look at during the week, having a look with you boys at the Core Logic home value index. And I've got the numbers here just for the annual change in dwelling values for the major capital cities. So Sydney down by 13.4%, Melbourne down by 9.6%, Brisbane down by 6.8%, Adelaide Adelaide's gone up by 5.1%. Perth has gone up by 2.4%. Hobart down by 11.8%. Darwin up by 2.9%, and Canberra down by 6.7%. So across like the national average of change in dwelling values over the year, it's 7.9%. And Sydney, the only capital that still has a median value over $1 million for the home price. Westpac has said that they're forecasting a further 8% decline nationally in home values for this year, for 2023. One other point I was looking at while you guys were having a chat there was on those GDP figures, Brad, and it's tied in, household consumption grew at a moderate level, but the savings rate fell, and it's the lowest the national savings rate has been since 2017. Interestingly, we had a slump in imports, but a rise in exports. And that's what kept Australia's economy from contracting during that period. And there was one other data point that I wanted to touch on with you both.
While you're getting that, Arnie, a couple of interesting ones that I've sort of come across was with the bank economist forecast for home prices. You've probably heard me rant about it on previous episodes. Treat them with caution because they generally have no idea when it comes to property. But interest rates, they're pretty good at it, inflation data and whatnot. So they know their loans, they know their loan book. So that's good to know. There is a statistic of 10.3 million properties in Australia. How many of those out of that, I mean, millions, or even if you're a percentage if you like, have mortgages against them, guys? What do we reckon?
As a percentage, mortgages against them, I would say I'm going to go with something like 60%, Jolie.
I was going to say 60.
You don't even need to guess, mate. You win. Too late, Brad. No, 60%, 6 million have loans against the 10.3. So Brad doesn't get credit for that one.
I jumped in first. Oh, you still get credit for that, Brad.
I just said I'm backing up Arnie on that 60%. Before you even gave me the answer.
Yeah, I'll give you that. So that it's when you think of mortgages, think of it's 60% of the economy.
Basically, our parents hardly do.
Yeah, they don't. And yeah, it's an interesting time frame, and I think I've banged on about it a little bit before with the fixed rate loans coming off this year. The 800,000 number's pretty spot on, Arnie. It's been a higher than normal period for fixed loans. They're usually a very small percentage of the overall loan book is fixed, and that's just because we went through the environment and the era we went through just recently. And it'll be interesting to see how it goes from RBA governor side of things with what they see with those fixed loans coming off and how much impact in slowdown of the economy occurs on the back of that, because I think the governor is hoping that really adds to magnification of slowing down the inflation side of things and just adds to what we're seeing as a slowdown, but it's more gradual at the moment. And people on those fixed loans that are living in a two-speed economy with all this surplus cash flow are now going to have their cash flow eroded by those fixed loans going pretty much double to variable. So he's hoping that then speeds up this whole process, because I think the RBA wants to get to a point where they can start cutting again, not necessarily straight away, but towards the end of the year. I think they're hoping that a lot of the hard work will be done by then, and the brunt has been worn by the variable holders, and then the fixed holders to come on top of that to slow things down. That's just my thought, general in nature, but that's what I'm seeing or feeling that will come as part of this year.
I got two other, so that ties into the other data points I wanted to mention, and it was in regard to the household savings rate. It's dropped for the 5th consecutive quarter in a row, boys, from 7.1% down to 4.5%. And during the week, I think maybe even like yesterday, Commonwealth Bank and NAB, out of step with the RBA, have announced that they are hiking their interest rates on certain loan products preemptively. Not all of their loan products. So that's
and in certain areas.
Yeah, it all goes towards what you're talking about, Jolie. So yeah, it's an interesting landscape. I think that the RBA would love to cut, but I also think, as we discussed previously on the pod, they're going to have to sort of follow whatever the US does, and it looks like they are in no hurry to cut there. I think they're still going to rise and then try and hold it steady for a while.
Yeah, there'll definitely be a global side of things to understand in a tilt, but will be a little bit different to the US with interest rates, because they're historically different with how they operate with their rates. Same as New Zealand, our neighbour. I think they've raised 50 basis points recently. They're sitting at 4.5. So, and they started raising really early. So, local economy and diversification of economy, I think, has a lot to do with interest rates. But yes, I think you're correct in terms of America. And just global in generally with the interest rate environment we're seeing, like just thinking back years, Japan's been historically low for so long because they've struggled to get inflation over there in Japan. And that's the other side of the coin, is when inflation's running hot like this, they're trying to slow it down because they don't want rampant inflation to happen. The other side of the coin is when inflation's not enough, like it hasn't been in Japan, it's not good because you're not growing and the GDP is not there. So they're trying to stimulate. In Japan, they have been for years now. So, and it's an aging economy, and the spending rate is too high. You talk about the saving rate. Saving rate's too high there. They don't want you to save that much. So it's quite fascinating. I remember learning that in economics, I think in high school or uni. It's like you've always been taught it's good to save, but then in Japan the people were saving too much, so the economy wasn't being worked on. So,
yeah, I think, Jolly, I mean, other case in point also is I know a bunch of people with kind of fixed mortgages coming off, and I would say they're already starting to plan ahead, because a lot of them are actually going, okay, how am I actually going to afford this? Okay, I've actually got to like save up money for the next 6 months wire flow to actually help me, and hopefully by the middle of next year it go back down. Because I know a bunch of people that are will be under mortgage stress.
Tell them that's very smart from a financial planner hat, Arnie. It's behaviourally not usually the most common thing. People like to plan or think maybe they start to make amendments, but when they're forced to do so, that's when they really make the cuts. But
gotcha.
Starting to plan ahead is good, but it's not all. It's generally that's the aberration. So they're doing well if they're sort of mapping it out and saying, okay, we're going to go to $2,000 a fortnight here from $1,000 a fortnight. We're going to start factoring that in. And less avocado on toast down the local cafe, and have that coffee at home, just to try to make sure that
no wagyu at the steakhouse. And
wait, you got to go one step further. We'll start selling avocado toast out of the home.
Exactly, that's funny. America style. And the only other thing is listings. So listings are down. I've only got Victoria here, but in some parts of the state, 30%, Melbourne down 10%. A lot of people are kind of holding back, seeing what's going to happen with the market, a bit fearful, which will be interesting to kind of see what happens kind of later on in the year. So, yeah, look, that's there's some loan data, some GDP data, some payment data, some all sorts of data. But, yeah.
Great.
Enjoy.
Good one, boys.
Well, for those who say so myself, Arnie, Brad, and myself, but good to touch on the inflation side of things and the story around that, and what's been happening with the rates and the rate rises, and maybe some general fixed rate loans coming off and what we're forecasting general in nature for the rest of the year. So keep an eye on that. The story will unfold quite rapidly as the year progresses, but the latest inflation print showing it's trending down, and that's what the RBA will be. We're probably having their fingers, toes, and everything else crossed that continues to occur and did occur. So good to see, and keep doing your thing, Australia, and keep trying to keep those hands in the pockets a little bit, and try to slow down a little bit, because that'll help us get out of this sharp interest rate rises that we've been experiencing. Arnie, did you want to touch on the rapid fire today with some great hot topics that you spoke to us about earlier?
Yeah, I'd love to, mate. And I invite you both. I'll stop after a couple of them just so you can comment, because I think some of these I'd be interested to get both of your perspectives on. So
we'll throw up a hand, Arnie, if we've got comments.
Yeah, okay, good idea. If you've got
a story. There you go.
Yeah. I'll try and I've kind of grouped them together. So I'll read a few and then I'll ask you guys about it. So the first ones are Tesla and Elon Musk centric. Okay, so Tesla Mexico, they have basically confirmed that they're going to have a plant located in Santa Catarina. I might be saying that wrong. Santa Catarina municipality in the Monterrey area. And they've also announced that they're making an AI competitor, so competitor to ChatGPT, which is interesting because Musk was actually one of the founders of OpenAI, but then sold his stake to Microsoft. And Tesla engineering headquarters has moved back to California. Famously, they left California for Texas after one of the local politicians said F Elon Musk on Twitter, and he said, message received. But yeah, he's moving a portion of the business headquarters back to California. So what do you think about the Tesla moves, lads? Have you followed it at all?
The only one, obviously, that I was following was the AI one, only because it's interesting, kind of, it's going to be changing the world over the next kind of 3 to 5 years. I mean, yeah, he was one of the proponents of ChatGPT because he believed it needed to be open, and that's the only way that we were going to be able to control it safely and the rest of it. And then obviously it dumped out once Microsoft was putting in the $1 billion and it was becoming less and less open, more and more commercial. So I mean, it's probably a good thing that he's starting up another one, seeing as though Microsoft just put another 10 bill into ChatGPT. But same time, is there anything that he has? I mean, he's got a lot of AI machine learning stuff at Tesla that he can obviously put into it from a different standpoint. But I mean, I count him as just kind of another one of the ones that are in the running at the moment. I mean, you've got Google's got their own, Facebook announced they're doing their own, Apple's, they're all.
Baidu announced theirs as well last couple of days as well.
There you go, right? So everyone's kind of obviously trying to run at while it's hot. I mean, I had an investment go bad in a startup in Singapore, and they're in that space, and suddenly, they're just like, oh, this is the best news ever. Because I was like, is this the worst news ever? Like ChatGPT, it's done now. And they're like, no, this is the best. Hype. I was like, awesome. So I think you just watch your space in that regard. I think California, having lived there and seeing so many people leave. It's obviously around it wasn't just to do with obviously Twitter thing. He'd been smashing heads with them around, safety lockdowns. He worked through, ignored them, saying that they just shut down their legislation, their taxes, everything like that. But I mean, California at the end of the day has the biggest population in America, and they need to sell a lot of EVs, and so they always come back. And he met with what's his name, Gavin Newsom, this week as well. So I'm sure there's a few things.
Part of that meeting was the announcement of the headquarters. But
was it? Okay.
Yeah, California, one of the largest economies in the world. Joel, have you got thoughts on this Tesla news?
Just a different Tesla one was the article I read a few weeks ago. Was it about 360,000 vehicles recalled for the self-driving feature?
Yeah, and Musk took issue with it because it's an over-the-air software update for them, not akin to a normal recall. But the stock really copped a big hit in after hours on that news.
Cool.
But so I got a few other groupings here, boys.
That is actually funny. Sorry.
No, go ahead.
That is over the air, and they're making them actually recall the cars into the thing. It's like, no.
No, they're not. They're not making the recall physically. They can do it over the air, but Musk takes exception with the terminology like recall when he can fix it over the air, or Tesla can fix it over the air. So he's saying it's not
over the air to the listeners. Is that just cloud based?
Yeah. So
you got honey.
All the cars are hooked up to the internet and Wi-Fi, so they can just when it's parked in their domicile, they can just set it to update mode and over the air or fix whatever issue there is in the software.
Yep.
So the next grouping is about Goldman Sachs and inflation. And then I got a big grouping about China, different news items related about China. And there's a lot going on in that space at the moment. So Goldman first, boys. Actually, one extra little item. The former FTX engineering chief, Nishad Singh, is going to plead guilty to US criminal charges. So FTX fallout. Goldman Sachs CEO David Solomon says inflation is going to be stickier than first thought. And same CEO said that anyone running a business needs to be prepared for a bumpy 12 to 18 months. He said that operating in China is going to get tougher over the next couple of years, but Goldman Sachs will continue to service their clients in China. So I'll go to Jolly first, then to Brad.
No, nothing to add from that one, mate. I think that was a good update.
Why are they saying it's going to be harder to? What's their reasoning? I haven't read the article, but what's their reasoning around harder in China? Is that due to political?
Well, yeah,
nature?
maybe I'll read the rest of my items and we'll talk about because the rest are China related. So
because I know I've been obviously following as I have forever the Chinese economy and everything there, but then politics both was wondering why Goldman Sachs is saying that. But anyway.
Yeah, well, I think it's because of these next news items. Sure. So not this next one indirectly, but there's a few here. So I'll go through them and then we'll have one big discussion at the end. So Elon Musk again has been warned about his lab leak tweets by the China state media. Tesla with the Shanghai factory has a privileged position in China. FBI Director Ray has confirmed that COVID-19 likely originated from a lab incident in Wuhan. US commerce official has described China's TikTok as a threat in hearing. The House panel is voting on a bill which will empower the Biden administration to ban TikTok in the US. European Parliament has taken decision to ban TikTok on staff phones, private devices, Parliament email and network access. Decision will be announced soon. US State Department has seen, quote, China very clearly take a side with Russia in the Ukraine war. US State Department has said that the fact that China is engaging with the leader of Belarus is another example of how Beijing is deepening engagements with Russia. They have also pointed to... Actually, I'll pause there for a moment and just get your thoughts on that, because I think part of the reason why the Goldman CEO said that ties are going to be difficult in China is because of the worsening political relations between the US and China. And I've got a few more points on it, Brad, but I'll let you two have a quick chat about one, TikTok, and that first.
Do you reckon the relationship with US and China is better now under Biden or Trump?
Oh, did you say US and China? I think it's probably better off under Trump, even though there was the US-China trade war, which was a big escalation. They've kind of resolved it in a good manner, and then things were ticking along nicely with those two countries. Since the Biden administration has come into power, and then obviously there's this geopolitical event, the war in the Russia-Ukraine, which is, neither of them are directly involved in, but they're both heavily indirectly involved in. I think relations are probably the worst they've been in a while between those two countries.
Yeah, I'd agree. I think Biden's kept on the trade war stuff, but he's ratcheted it up, right? I mean, whether it's to do with silicon and chip manufacturing, whether it's to do with a whole bunch of other economic kind of, technology bans across the sector trying to make America, Trump started with Huawei and stuff like that, but Biden's kind of taken what Trump's stance is on China and kind of ratcheted it up. Obviously, it was during the Biden administration. You had, Pelosi going to Taiwan. You've had Russia. You've had, I would say that they're pretty tense at the moment. But I think we've also been, sleepwalking towards this. I mean, the closer and closer we get to like 2030, which is kind of the date that China's put in the ground, that Taiwan will be one way or another back in China's things. Every year that we get closer to 2030, I think we're going to see ratcheting it up. So I'm not sure if it's technically Biden as per se, or if he's just kind of working off his military advisors and intelligence. But I'd just say, to answer the question black or white, I'd say it's out of this administration. But I don't know if any other administration will be any better, because I don't see China not soft supporting Russia, and actually like looking at them as in a negative sense. They have come out with their 12-point plan, haven't given lethal munitions yet. So there's people saying stuff on either side. it was quite interesting hearing kind of the Indian foreign minister speak the other day. How he was saying how 80% of the world's population hasn't voted against the war in Ukraine. And I was like, oh, interesting. When like you put it like around the population, he's like, yeah, the Western nations have, but 80% of the world's population haven't. It's like, you're like, that's your Western kind of view on things. And I was like, oh, interesting. It was just an interesting fact that made me go, 80% of the population hasn't voted against it. Wow.
Was there a vote that I missed out on? Was there actually?
No, because people abstained, right? So countries have abstained from a lot of the UN votes, and they're obviously China, India, South Africa, all these kind of, Brazil. You had Brazil president recently over in America saying, "No, I'm not going to. People need to start talking more and the rest of it." So it is interesting. But back to your point, Arnie, on China. I think business in China is going to be quite hard. But obviously, the Chinese economy also. You had recently. I don't know if you got in your quick bits. One of the world's biggest manufacturers. I'm trying to remember their name. They came out. That was in the big news. They came out last week saying China is no longer going to be the world's manufacturing for them. They're looking into Vietnam, Thailand, all Southeast Asian countries.
Many times over the years where an economy becomes too big, too strong, too developed, and its cost is cheaper labor elsewhere, and these plants are pretty ruthless. They'll just move.
Yeah.
Where the labor's cheaper. I saw an article yesterday, I think it might have been on that daily email article that you put us onto, Brad, with China opening up again. And I think it was about 7,000 Starbucks planned to open up for this year, maybe, and a few thousand, was it McDonald's maybe, or one of those ones. So that was interesting. And I think the other thing they mentioned in the point was China being kind of involved with the Russia-Ukraine war, getting involved or picking up or putting in businesses in place of other global businesses. So, their telcos or their other businesses or car manufacturers, whatever it might be, they're putting in place in Russia when these other global companies have left. So they're doing it in that way too. So it's interesting, but at the same time, China's opening up now. So it's helping the world open up from a growth perspective and a supply chain perspective, because China's stopped the zero policy lockdowns now.
Well, yeah, that's good discussion, boys. Brad, you actually touched on one of my last points, which was the 12-point plan, and Russia has basically knocked it back and said this isn't going to suit us. And the last one, which is a bit old in terms of the news, but there was the news about America shooting down the Chinese spy balloon with a $400,000 USD Sidewinder missile. And then there was a report that came out that it was a $12 like hobby balloon, and it wasn't a Chinese spy balloon. So I don't know who to believe. I saw these conflicting reports, and I just feel like it's just an odd news story. But yeah,
which balloon? The first one?
Oh well, yeah, there was multiple balloons, but
one was definitely China's.
The one that got shot down. One of the ones that got shot down with a Sidewinder was a $12 hobby balloon. So
China came out and they were saying it was their balloon. It just went off course. So they wouldn't have said it was theirs if it was a hobby balloon.
Yeah, maybe they wouldn't have.
Is that just the army justifying their expense for a $400,000 Sidewinder missile that they shot down a $12 hobby balloon?
Yeah, it could be.
It was an AIM-9 Sidewinder. Why not?
Anyway,
the reason why they did it though, and they didn't just use the gun, is because there was a balloon and there was like a video. I think it was in Canada. And it showed a jet doing like 4 passes against this balloon, trying to shoot it down with the actual, like just a normal machine gun, and it missed 4 times. And so I didn't think they wanted any videos of their F-22s missing the Chinese balloon, so the Chinese media can do some cool videos. But they did cool videos anyway. So
running a bit short on time. I'm conscious of time, boys, but let's hit this 50-50.
Yeah, so
50-50
today. I'm not sure if you boys have one, but I've got one just on the side here noted down. Was with I don't think we've done it before, books and audiobooks. So if you had the option and choice, would you be happy to do just the book as an audiobook, or would you prefer to pick up the physical book and read it?
I'll go first. Depends on the person narrating. 100% for me. So I'll go audiobooks first. But if I start listening to the person narrating and they've got a crap voice or very monotone, I just pull the pin and go straight to the paper book. That's me.
I will go with physical. I just prefer it. But I'm only choosing a side because it's 50-50. I think they've both got their place. And I will use and utilize both. But if I had to, like line in the sand, Joel, if you said that you're going to eliminate one tomorrow, which one do I want to keep? I'd keep physical books.
Okay.
See, if we had to eliminate one, I'd have to keep physical books in case that audio, the narrator is horrible.
I'm an audiobook guy since I had kids. Pre-kids, I was a physical book guy. But if I'm on holiday, physical book all the way, because I like sitting there and just reading a book and ignoring the kids. Bonus question for you both. Arnie, how do you go reading the physical book when the kids are around? Do you try to do it outside of them?
Impossible.
Impossible. And Brad, what speed, and Arnie can answer this too, what speed do you listen to your audio books on?
Between 1.25 and 1.5.
Two times all the way.
Two times.
Well, hey, I'm a 1.8.
How about your WhatsApp messages? If someone does an audio message on WhatsApp, is that 2 times as well?
I actually leave that on normal speed because they're typically short.
I haven't ramped up to 2 yet, Arnie. I'm a 1.8 guy on audio books.
1.8.
Podcasts are about a 1.5 usually, but two's living in the fast lane there, mate. You're an efficient guy.
Got to consume as much as possible.
Open up that family party.
So,
cheers,
Arnie,
boys.
where can the listeners get at us to tell us what speed they listen to their books on, or what they prefer, or any topics that the listeners want to listen to us on, or talk about in general in nature, and add some 50-50s while they're at it. So where can they get us at? Where's the best place to reach us at?
Please get us at Main the Tank on YouTube, Instagram, Twitter, and Facebook. Yeah, and leave a like, comment, subscribe.
Absolutely. Thanks for listening in today, guys. Thanks for the tankers out there in tuning in. Hit us up with any topics you'd like us to discuss and explore moving forwards. We've got some great guests coming up as well this year that we'll bring on to chat all things finance, but just subject matter experts in general, because we get great feedback on those ones. We look forward to hearing from you guys in terms of what you want to hear about. Keep the questions coming in. We appreciate them. We love them. And thanks for listening to episode 57. This is Money in the Tank.